investors.
The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here. This is the Tiger Technicians Hour on this April the 30th, last day of the month. We can look at the monthly candles and say, well, there's no chance. It's not often you can say that, but there's absolutely no chance that this won't be a peak C in the monthly chart, because we will not, under any circumstances, you never say that in the market. You just never say that. I'm saying it. To go over 39,889, the high of the 21st of March. Therefore, this is a peak C in the monthly chart of the Dow. The weekly chart, 9-period moving average, is slowly coming down, but it hasn't crossed negative yet. The daily chart has a nice W formation with higher highs and higher lows in the 9-period moving average, but it hasn't crossed positive yet, even though the MACD is good. The relative strength you can see here on the left is okay. It's not great. The on-balance volume is quite weak. It means you haven't got volume follow-through yet. The stochastic's rising, but it's only at 51%. Ooh, a lot of work needs to be done. However, I'm anticipating that. Should I do that now? No, I'll get to the anticipation in a moment. Let me just do each one separately, because it's the end of the month. We want to wrap the month up with having a good sense of what those weekly and monthly charts are saying. So the monthly chart of the S&P is making, now this is going to be very interesting, the high that was made at 5264.85 on the 28th of March, right there. I'm going to just go through this again. That was in March. In April, the high was 5263.95. It sounds like nothing, but in the Chapman wave methodology, there's certain parts that are so precise that there's nothing you can do about it. You just have to deal with what you've got. And that says there is no doubt in my mind that this is going to be a peak D, and the objective in the Chapman wave methodology is to get an upgrade of a buy signal to a buy mode of a particular move. And that says that you should be at least 4 higher peaks. Peak A is the first, B is the second, peak C is the third, peak D is the fourth. That's where other things can happen. Now, you see that this is a peak C in the weekly chart. However, just a little unusual, but every once in a while I have no choice but to do this. The weekly chart of the E-mini, the futures, did make a peak D, absolutely legitimate peak D. There were 4 precise higher peaks. The SPY went to a peak C. There's no other way I can count it. The RSP, is that what it is? Yes, RSP, which is the right here. This is the S&P, but it's called the S&P Equal Weight ETF. I like to just use this. It's kind of a barometer of what the equal weight is doing. That is also a peak D, because the 169.80 high of March, just the 28th of March, it's almost like exactly a month ago, we did not make a new high. So that's the monthly's peak D. Now, this is a little different. So I don't like to have a whole variety. I like to take a consensus to get a sense of what's happening. So if I look at the weekly chart of the RSP, the S&P 500 Equal Weight ETF, that peak C never went. I couldn't even make a phantom peak D. That was peak C around about July of 2023, pulled back sharply to the 200-period moving average. It was still within the context of the low that was made back in October, the week of the 14th of 2022 of 124.92. That is still active. So that's a peak peak A. By a fraction, it missed going to a peak B at 150.20 on the week of the 2nd of December of 2022. 150.20 goes to 150.08. That just failed. Oh, sometimes I have to use a phantom peak there, but I couldn't do it here. So that would have been ABC. That would have been a D. This would be a brand new peak A, peak B, and we'd have a C. Instead, I've got a peak F right here. So it's kind of confusing, but I'm not making it confusing at all. It is based on the E-mini, a peak D, and I'm calling that a legitimate top, but I haven't got even a sell signal in the weekly chart of the S&P. Just wanted to clarify that. Month is ending. We need to do this. Now let's go to the QQQ. That's different. That has made a legitimate peak D in the weekly chart, peak D in the daily at 449.34 on the 21st of March, plummets down to the 413-ish area, 1412. And here we are with a very nice rally, but that pink 9-period moving average hasn't turned green yet. That's a warning to say, be careful. We're in a trading band. For subscribers, we're treating this as a trading band that from the lower part, we should rally to the upper part, and then we're going to see what happens on any pullback. Is this a slow kind of a slightly higher highs and slightly higher lows kind of thing that goes on for a couple of weeks? I don't know yet. We'll know very soon. IWM is at a peak E in the weekly chart, only a peak B in the monthly chart because it's not acting very well. And the daily's got a peak B, but it's really struggling, although the 9-period moving average has improved and the MACD's crossed positive. Stochastic's running at 48%, but this is not great action. So, sum it up. The 9-period, now I can go to what I wanted to do. Now I can show you the veracity of this particular index. Look, here is the Dow, just using the 9-period exponential moving average, which from the November the 3rd crossed positive, didn't go pink at all, but went pink right here. We did have a short position, then we switched to a long position. Now we've got a trading position we've just added today with a really tight stop, only because in the next day and a half, I know everyone talks about fund buying, comes the end of the month, there's fund buying. I don't look at it quite like that. I look at it as if this 9-period moving average had a chance, if today closes way off the lows, it means that 9-period moving average is getting closer and closer to at least crossing positive so that we could have a decent bounce, and then I think we come back to test close to the lows that we've just made. So, summing up, Dow negative in terms of the 9-period moving average. We call it the 914. The 914 crossover is negative, stays negative for now. S&P is negative, has a chance to cross positive today or tomorrow or the next day. Hasn't yet, so that remains negative as it stands right now, as we're about to close out the month of April. The QQQ, that's the QQQ, that's the index 100. Same thing, has an opportunity here to cross positive, hasn't yet, days here, well, we're not even an hour into the trading session. I'm anticipating some kind of a bounce. We're trying to play that bounce. We'll see if that works in one of the indexes. IWM has a chance to cross positive, hasn't yet, trading down at $1.68. Now look at this. Isn't this interesting? Look, there's this 9-period moving average with gold. Look how sharply the price has plummeted. We're down 46 points at 23.11. That 9-period moving average is a whisker away from turning negative for the first time since it crossed positive on the 28th of February. Hasn't yet. Let's have a look at silver as we go to the break. Oh, silver just crossed negative. Well, the day's young. Anything can happen. I'll be back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the US futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, so Basil Chapman, last day of April the 30th, and we're just going through the monthly charts because the month is about to finish, and I made a declaration that we will not see new highs in the indices today. Therefore, the monthly charts, you can consider that a peak has been made in all of them. Defying the trading gods, mister? All right, well, here we go. And I had a bunch of questions. Let me get to them. One was Tesla. Let me start with that first. Tesla had a huge move up. It had two huge gaps, actually, and it went from 138.80 just 1, 2, 3, 4, 5, 6, 7, 8 sessions ago. Yesterday, it hit 198, almost a 200 period moving average, 198.87. And pulling back today, 6-7 points at 187.38. I think this is the move here. Tesla should start now. Look, it went right to the 200 period moving average of the weekly chart. That's been a repellent. It should be a repellent once again. I drew this in a long time ago, and I said, I don't think it's going to happen very soon. I think you've got until maybe May, towards the end of May, where the 101.80 level might be tested, but I'm going one step at a time, and I just needed to see that the histogram was starting to improve. This was a couple of days ago. It was when we were actually going down to that low last week, and I said, this is a measured move. I can't see it usually 3 times. It's amazing when you get something that occurs in the market 3 times in a row. It's just unusual. 4 times? I don't know. Something has to happen differently before that happens. So this is the part that's different. I'm just saying that as far as Tesla is concerned, there is intrinsic weakness in terms of sales, but then there's a whole story with Musk. So look, if you're trading Tesla, my recommendation is to, whenever you get an opportunity and you get a gain, take the gain and come back and try to just repeat that over and over. If you were short anywhere up in the 250 area, I have no problem saying to you, fine, you can stay short. I would have trading positions within that and keep a course short. But the guy is so good at getting these announcements that just, he's involved in SpaceX, right? Well, there are some very spacey things going on over here. You just cannot rely on a particular trend that is going to stay in place without some interruption. That's exactly what we've got. Here we are. Look, the pink 9-period moving average is still very far from the black 14-period moving average, and yet it went all the way to the 200-period moving average. So we're watching this closely. So all I can say is, I don't know what it was. Just could I look at Tesla, and I'm looking at Tesla, and all I can say is, it's an interesting thing. It's a fascinating automobile. I've already spoken to a couple of people. Those people have just loved the speed and some of the aspects, but quite a few people have talked about the quality and that the new electric vehicles are surpassing Tesla in many ways. So all I can say is that I think Tesla. When I look at Tesla, I look at Apple. I'm saying at a certain point, innovation can go so far. But then you also have to rely on a steady income, and that steady income, I think, is going to be the chargers, and that means that Tesla won't go out of business, but it's going to have to rely on some other things as well. That's all. So here we are. So what are the parameters? A close above 202 would be really impressive. I think that's going to be difficult to do, but on the downside, I would say just watch very closely. It's at 187 now, but the 174 pink 9-period moving average just starts to go below that. That'll deflect lower, and that'll say, another bit of a slide is coming to Tesla. Okay, done with that. Let's get out of this, and we want to go to next question, which was, where was it? RTX, which is Raytheon. Raytheon is trading, I was going to say, it almost looks like Tesla. Now, why is that? Because I typed RTX in the wrong place. I was going to say, this is identical to Tesla. What it is, because it's Tesla. RTX in a sideways move. Now, this is Raytheon Inc., defense sector. First of all, I was asked about this recently in terms of the anything in the defense area. Would you short anything? And the answer is absolutely no. I would not short anything in the defense area. That's in play, and it's going to be in play for all of 2024 at least. So that's the way I'm looking at that. Now, is it in play for short-term trades? Yeah, but you know what? This Raytheon, I think Raytheon's technology is going to be required, and it's going to be required by a number of countries. I don't know if they're allowed to sell to all these countries, but that's what I'm looking at. 103.89 was the high. Oh, I forgot to type this in. I saw it. On the 23rd of April, Raytheon hit 103.89. Let me just type that in because I got a little surprise here. 103.89. Well, it also opened at 101, I think it was, open. And that was the 23, 24. Here we go. Let me just double check all this. It's funny, as I'm talking and typing, I'm almost saying, wait, what was that round number? 101. Yeah, that was, and it was, I got everything right. Very good, very good. Must have been that tennis yesterday that invigorated the mind. Okay, there we are. So, and it's just steady. I'm saying don't short. If anything, I would love to see a pullback under the consolidation level, which is in the between. Whoops, what happened? No way. How does this happen? Let me just go to the right, and it says, I'm looking at this. I'm looking at a blank right side. Insert symbol, insert analysis. What am I looking for? I'm looking price axis display on the right. Caramba, how does that happen? Yeah. So I'm saying to you, if there is a pullback towards 98, give me a yell. We'll look at it together, and I would suggest, I'm probably going to suggest if it pulls back to 98, maybe. I'm not saying for sure because you have to see what's happening technically. 102.35, 102.26. This is either a leg F to the upside in the weekly chart, or it's recycled, and this is an F/B, but whatever it is, the stochastic is flat at 91%. That's what you want to see in the weekly chart. I love this. So if there's any pullback between 98 to maybe 96 over the next 3-4 weeks, give me a yell. We want to look at it because I think it's going to break this Chapman wave inside track repellent zone in the monthly chart, huge falling axe formation, and move up. That's all I can say about that. Okay, next question was, where did it go? Oh, that was the, could I follow through on IAK? IAK, yesterday I spoke about it. I notated it. This is the iShares U.S. Insurance ETF. What exactly was your comment? My comment was, it's been absolutely outstanding. When I looked at, I'm picturing it right now. It's got 2 L's. It's got an E. 2 L's and an E. Well, insurance. Gosh, why am I forgetting? Anyway, it was any of the insurance companies, they've had a fantastic move to the upside. A little doji candle high on just as we got into April, and it's pulled back sharply. I just don't do anything yet. It needs to consolidate. There you are. That's what I wanted to say. I'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi, folks. Yes, the stock I was looking for, thank you, Dan in the Den, it was Allstate Corporation. I remembered it just as we got into the break. Look what happened. It made a peak F, and then it had this big spike to the upside that I call a G. So far, it could be an A, but I'm calling it a G for now. This is what I call the double hump, camel double hump. That's because there's a move in the technicals, another arch formation. You know, some camels have two humps. This is a second one, and this is the one that fails. This is like, let me just show you, go back to the IAK. So you see the pullback that we've had, and what I wanted to look at the same time was, if I can just find out, I didn't, Newmont? Yeah, see Newmont? You see this is the same pattern. You see it makes its top, and then there's a sudden spike to the upside, and then it pulls back sharply. This is the one that you have to monitor very closely because the technicals usually remain quite good until there's a big pullback, and you start to see the stochastic drop sharply from over 80% to way under 80%, something like 73. This is now at 78%. It's not bad, but we're going to watch Newmont very closely. Had a high of the spectacular move. Look at this weekly chart. Just a brilliant move from under 30 to almost 44. It went to 43.90 something. Yeah, 43.91 yesterday. So it's down 3 points. Not a big deal, but it is a big deal in terms of the percentage on a day. But look at the way it's moved up. So it's just filling in the gap, not even filling in the gap. It hasn't even gone down to the low of 4 days ago where it gapped up, which was a low of 39.98. So anyway, I just wanted to show, I'm talking chart patterns, that's all. So just to review, Monster, yes, MST is not Monster, that's MicroStrategy. So in the Den, S&P says, yep, oh, ho, ho, that's what we've been looking for. So I spoke about this. Gosh, should I write a paper and send it into Stocks and Commodities magazine about round numbers? I've been wanting to do that for decades, and I've never done it. I've actually never seen anything written up about it. Look at this. All-time high on the, did I forget the date? Yeah, the date was, I think, March 27th. March 27th. Let me just put that in so I don't keep forgetting. 3/27/24. Look at that. A massive spike to the upside. That's exactly, this is a double camel hump. Same thing. The same, I better find something else to call it. Call it the M-shaped pattern. Oh, that's it. The M-shaped pattern. MACD M-shaped pattern. Look what happens. It bounces up. Technicals don't correspond to it in the MACD. Stochastic also a lower high. And then it fails. It goes to 1999.99, all-time high, 1 penny away from 2000. But on that same day, there's a 1953.00 open, a 1942.00 low, and that's it. It has a whole bunch of round numbers after that, but here's the point. The point is it made a 1258.00 round number open about a week and a half ago. That was around about the April the 18th. And it runs very nicely up to just about 1,400. And now it's made the dreaded H pattern, fails at a peak B, takes out the left side low. I have to tell you that I'm not that sanguine about what we're looking at in the markets. That's why we didn't add anything today other than a short-term trading position. And that's all it is, just a trading position. And this is a B minus. Because not everything is in sync. And when I get those 9-period moving averages crossing negative, I have to respect that. I should be back to the short position, but today was really important. Still important. If you're looking at the indices, they're still holding pretty darn well from the lows that were made. So MicroStrategy, peak F in the weekly chart, the 9 is still way over the 14. It's telling us either that the green 9 to go pink would have to see MicroStrategy trading in the 800s. It's at 11.28 right now. So this is still a positive 9 over the 14, but it's not anything else is not positive. So you got to watch it very closely. And then monthly for a peak D to scream from 1,000 to 2,000 and then come back all the way to 11.26. 1 month green and the next month, well, the month hasn't finished, but so far it looks like today's going to be red. Wow. I mean, that is really something, right? Okay. So that was mentioned in the den. Something else. Oh, so AIG. Oh, that's what I wanted to do. So talking about this M-shaped pattern in the MACD, within the context of this double top right here, look, we got almost the same thing in miniature, going to the 78.95 in American International Group, that's insurance, goes to 78.95, has a Chapman wave 2-bar reversal at a peak G, and it's gone from 78.95 down to the 71 area. It's only 10%, but for something that's moved so fantastically in the weekly chart, look at that. The insurance area was just an amazing, amazing phenomenon going to the late March, early April highs. All right, so now they can have a bit of a rest, that's all. So now I need to check something I wanted to see about questions. Where did I go? SMHs. Oh, Advanced Micro Devices has earnings today. So let's see where the SMHs are going. They are holding really well. Look at this. Down 15 cents at 218.20. Okay, I need to explain. When I'm looking at the market, the reason why I have like a chessboard, it's like a potpourri of information, is that you can have conflicting information if you look hard enough. If you overthink that, it can lead to a real quandary. But if you put it into the pie that I kind of think is very important, and that's to say, semiconductors invariably lead us to higher highs and lead us to lower lows. No, I shouldn't say that. The semiconductors are the guide that give us the direction to the upside and to the downside. There, that's a much better way to do it. And if you think of the semiconductors as the chips, which is the oil of the 21st century, just as the oil was the generator of so much, you can say bad, but so much good for the 1900s going to the 2000s. I mean, everything is, whether it's plastic, whatever it is, has been used in the 1900s and 2000s for our consumerism. Well, chips are doing the same thing now, and they will go on and on and on. So that's the new oil. That's what I think. I'll be back in a moment. So the semiconductors are holding very well, up 17 cents.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi, folks. So I'm trying to put this into perspective. The reason why I can't be blanket very, very negative, but I can be selective negative, is look at the semiconductors. You've seen NVIDIA go from the round number high to round number low and then have a very nice bounce. But it's the bounce so far. But that's an important sector. But you've got Microsoft, Microsoft, I should add. Oops, I typed in the wrong place. Which is really acting poorly. It's just stuck in a trading band. And it's making it's turned around viciously from that peak A at a 413 round number high just 3 days ago, trading right now at 399. The weekly chart, it looks like at some point the pink 9-period moving average is going to come into play. It hasn't yet, but you can go through. Look at Meta, ugly, ugly. 531.49 all-time high. 531 all-time high. Peak F. Plummets down, just looking so ugly. Apple has a good move today, but wow, it's really come down from the 200 area down to the 164.06 low on the 20th with 165 round number close. So now you can see what I'm saying, that even within a sector, you can get some stocks that are already done. In this case, a consolidation, trying to have a bit of a balance. It's actually working quite nicely here. Look, the pink 9-period moving average in the daily went green. You've got Netflix. Netflix is trading right now down 379 at 555.70. 639 round number all-time high. I mean, these round number highs, I've got a whole thing. I've listed them. I don't want to go through them again. On the 8th of April, plummets down to the 540s. I would say that a 100-point decline is something quite serious. So what's going to happen? Money tries to find its best home. That's just the way the markets work. So these fund managers are going to say, you know what? If our Mega 7 are really in trouble, we got to start looking somewhere else. Well, the question is, will they go to the small caps, the iShares 2000? Because the iShares, the 2000, look at this, IWC, that is the microcaps. That looks very much, in a way, it looks like the Russell 2000, but overall it's done a little bit better, but it's the IWB, the 1000. Look at this. All-time high just about 4 or 5 weeks ago in the 288 area, drops to the 271s. Now it's moving up. but the 9 and 14 period moving averages are starting to improve. The MACD is cross positive. Look, here the relative strength is improving. So I'm saying this is not just a blanket market. This is a market of pockets of positives and pockets of negatives. And that's how you have to look at it. And that's why when Advanced Micro Devices comes out with its earnings, a stock that's gone from the 227 area back in March down to the 200 period moving average of 144, trading right now at 161.44. I can't predict what the market will do, whether it's positive or negative at the close, but I'm saying to you tomorrow, if Advanced Micro Devices, which right now is up $1.14, if there's even a chance that it can get to 165 to 168, a nice 4-point move to the upside, rather than a 4 or more point to the downside, all of a sudden it's going to help the 9-period moving average. And then you've got NVIDIA, which made its high. That was back on the week of the 10th of March, gone to a leg C right now with that round number close of 762. It's now at 878. That's really nice. Gosh, I don't know why I didn't actually go long in NVIDIA. I thought about it, but I thought, oh, what a weird market. Surely you've got to be careful with this stuff. But this is good action. So I'm saying to you, if Advanced Micro Devices saves the day at 10 o'clock tomorrow, during my show tomorrow, if Advanced Micro Devices is holding a plus 4 to a plus 7, that is fabulous action. That's going to help the market a lot. And that's what we've seen, because Advanced Micro has had its consolidation, a massive consolidation, 227 down to 140. That is a big, look at this. I can't call this anything but a peak C. In the weekly chart, the 9 is still positive. So I'm just saying to you, in a peak D, it is in the monthly chart, that you could get this rotation even within a sector. That's really what I wanted to say. Watch for sector rotation, and then watch for rotation within the sectors. That's going to be important. That's why I think there's some kind of a base of support here. That Thursday smash to the downside and then the reversal to the upside. That was almost like look at this, the VIX index. That was almost like a weekly, not a daily, but it's like a week's worth of, just that one day alone was like a week's worth of, what was that? 1, 2, 3, 4, 5. What was that? I forgot to put the date. Let me look at that. That wasn't on Thursday. The 19th. Was 19th? 19th. Yeah, it was last Thursday. It feels like a month. What a week we've had. Ooh. Okay, that was on the 4/19. Very good. So look, you wrapped it up, and now the volatility index has kind of done its job, at least for this particular phase. So now you can see a little bit of a balance in the market. That's what we're getting. Dow's down 138. S&P's down only 9. And you remember what I said? Bear markets, bear phases, to sustain the move, you've got to have a 48 to 52 S&P futures down sharply. They're down 370 to 425. And then the market tries to rally, makes an arch formation, fails, and closes at the low of the day. Next day, futures are lousy because overseas everybody got nervous, and it opens lousy. And then it tries to rally, and it closes at the low of that. You've got to have 2 days like that. Then you get into the bear phase. This one day, that's just a breather. So that's all I'm looking at right now. And that's the reason now. Let me do this this particular point because I got a question. Where did it go? QQQ. Yes. So the QQQ, look, the 9-period moving average is still quite far from the black 14-period moving average. The MACD has turned positive. The on-balance, the relative strength is making higher highs. That's a good sign. It's not great, but it's definitely a good sign. The on-balance volume is rallying. It's not great, but it is rallying. And the stochastic has gone to 49%. So this is a work in progress. And one of the important things for me is that the MACD's histogram, that's the 0% line, has gone positive. Oh, there it is. Yes, 0.37. I was going to say, what am I reading that wrong? Yeah, it's gone positive. And the weekly chart, I need to do this because we saw this earlier on. I don't want to do too many things at once. I am going to say to you, when the price pulls back sharply and the 9-period moving average doesn't even come close to the 14-period moving average, be careful, because the rebound says that if the price starts to move over the 9-period moving average, and right now it's on it, that can actually give you a really good rally towards the bar that started the down move, and that would be the 440 level, and it's at 431. So I'm watching this very closely.
Tigers, the inaugural session of Live Trading Fridays with Larry Pesavento was a massive success. Trades were communicated, questions were answered, and money was made. Every second and fourth Friday of the month, from 9 a.m. to noon Eastern Time, Larry wants you to join him as he places live trades and takes your questions. That's right, with this monthly subscription, you receive access to 2 live trading events. We are gearing up for the next session Friday, April 26th, so there's still time to sign up. For this month only, use code LarryLive at checkout in order to secure $50 off your monthly subscription price for as long as you subscribe to the service. We'll see you next Friday, April 26th, Tigers. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Uber, question came up. What is Uber going to do? Will Uber catch a ride to the upside, or is it on the way south? Well, right now it's up 80 cents at 68.20. I wouldn't be surprised if Uber comes out with a slightly more positive than negative news, and that the stock does pop a little bit, maybe to 68.24, maybe up to 69 or 70, and then it starts to retest, because that weekly chart is really a concerted effort to the downside. So it'll take a huge amount of energy to save it from making lower lows. Now, just to wrap up, end of the month, and I'll be back with Tom at about just after 3, so maybe we can discuss it then. But as I see it, the Dow is consolidating. It's trying to see the 9-period moving average turn positive for the first time since it went negative. the way we're looking at it, we're anticipating that it's going from the lower range towards the upper range. It's lagging a little bit. The other indices, look, the S&P is already, even with today's little bit of weakness, made a leg beat to the upside, and the 9-period moving average in the weekly chart is still way over the 14, and it's the 9 is over the 14. So I'm saying that there's more strength right now than weakness, but it's a really important consolidation phase that we're looking at right now, and I will not ignore the 914s being pink in the daily charts of all the indices, and we'll see what happens next. But advanced micro devices is going to it's going to be key, but it hasn't been that important in the semis because it's had its high, and for over a month now, it's actually it's about a month and a half. It's just been going down, 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 and now it's had a very nice rally from the low that was made at about 143 to 161. Yeah, that's good, but it needs much more than that to really help the SMHs. Have a wonderful rest of the day. Check out my Opening Call Daily Newsletter. I'll be back to tell more about that. Otherwise, I'll see you